Hello, my name is Crystal Petry, and you are watching season 3 of the Crystal Petry Podcast. I have a great episode for my community today. If you have a small business, if you are thinking about starting a small business, whether that small business is one person, you, or 2 or 3 people, you need to know how to make your money work for you and your business. And here to educate me and you on that topic, we have Craig Levin. How are you, Craig?
I'm doing great, Crystal. Thank you.
You know what? Thank you so much for agreeing to be on my podcast and talk about a subject such as money, because I feel like you and I both know that most people don't want to be told what to do with their money.
Mm-hmm.
And we're going to do just that today. We're going to do just
Great.
that today. So, Craig, where in the world are you?
Well, I'm in the Seattle, Washington area, and this is not a new area to me. I've lived here all my life and went to college here, went to grad school here, and really don't have any plans to leave the Northwest anytime soon.
Wonderful. Well, I would like to say congratulations on that, because a lot of people cannot wait to get away from their hometown, even
Right.
if they just end up right back there. They normally want to leave and venture out. So that says a lot about where you are.
Yep. I consider this my home, and I think of, I've got ancestors that lived in this area for generations. And in fact, my grandma is one of the earliest graduates of the University of Washington, female graduates of the University of Washington. We're talking about 1918. So there were not a lot of women going to the University of Washington at that time, and she graduated there.
So you have history.
Absolutely.
History in your blood.
Absolutely.
Tell your grandmother we all, as females, say thank you. We say
Absolutely.
thank you to her because somebody had to be the first.
That's right.
Okay, so let's get into it, Craig. Again, you are here to educate us about how to make your money work for you if you have a small business. Tell me how you got into this field.
Sure. So I had a long career at Verizon Wireless in corporate America, and that's where I started my finance career, because I was very young when I started at Verizon Wireless, and I was there for 20 years. And when I went into it, I was a call center rep, taking calls about, folks complaining about dropping a call while they were driving, or, on one of those old brick.
The big, huge ones. Yes.
Yeah. And so I started taking calls like that, but the company offered a great benefit, which was tuition reimbursement. And so I had my degree in marketing from the University of Washington when I started at Verizon. But while I was there, they sent me through, a master's degree program at Seattle University, and that's where I got my finance degree. And so right when I graduated, like the week that I graduated, they promoted me into a finance job, and it kind of rolled from there. I learned all the best practices of corporate America, budgeting and variance analysis and modeling different, best and worst case scenarios for the business. And so that's really where I learned, my skills and built my business chops. And then after that, I ran a small business owned by somebody else, but I ran a small business for 5 years. And then when the COVID lockdown started, that's when I started my own business. So I'm just in my house right now, and this is where I work. I'm self-employed, and I help a portfolio of clients, a number of clients consider me their CFO, and I help them to optimize their business and stay on track to grow it. And I've been with multiple clients for a long time doing this.
So You have the education, you have the experience, you have the history. So you are the perfect person to have this conversation with, Craig. My first question for you, what are some of the most common financial mistakes that small business owners make in their first year?
That first year is tough, Crystal. And I'm sure your listeners understand exactly what I'm talking about. It's tough. A few people get lucky, but it's there's a lot of uncertainty right at the beginning, and of course there's a lot of excitement, which is great, but overdoing it with very expensive websites, let's say, and all the subscriptions that you could possibly have for a business, like Zoom and Calendly and premium chat GPT, and I've seen businesses load up on so many subscriptions that their overhead becomes very hard to deal with as a startup. Another mistake that folks tend to make, that I tell everybody, please start tracking your expenses and your income right from day one, so that you'll never have to kind of roll back and start everything from the beginning. I've seen some horror stories where when I ask folks for their financials, they they gave me a shoebox full of bank statements and receipts. And so we had to build their financials all the way back to the day one of their business. So the best time to start tracking your finances is on day one of your business. So I would suggest everybody get some type of system. Either QuickBooks Online is very popular, and if you're not doing that, just simply an Excel spreadsheet where you're tracking all of your expenses and all of your income from day one. So you don't want to make a mistake and miss your tracking your financials from the very start.
When you say tracking, Craig, what exactly do you mean by that?
So what you want to do at the beginning of your business, when you start spending money on behalf of the business, make sure that, number one, it's not just you out of your personal bank account writing a few different checks, let's say, or spending a little bit of money here and there for the business. You want to actually start a new account for the business and then pay everything out of that account. So some of your initial expenses might be, sure, paying somebody to build a website, or in my case, I connected with somebody on Fiverr who was in Spain, and he made me a great logo for my business. And so that was one of the first things that I did for the business. And I did it on Fiverr because it only cost $50. And so that's something that I would suggest for new businesses. The logo is not so important. The beautiful, beautiful website is not so important. Just, you want to be careful with your dollars. You want to have it separate from your personal funds. And you want to track. When I say tracking, I'm talking about, even taking out a Excel spreadsheet and say, this is the date of the expense that I made. This is the amount. This was the vendor. This is what it was for. And so you're always tracking your business results and your business finances separate from your personal.
What about a business budget? So this is a two-part question here, Craig. First part of the question, what is a business budget? Second part of the question, why is this so important?
Great question, Crystal. Budgets are kind of interesting because a lot of folks in small business world don't, their budget is in their head. And that does work for a lot of people. And I've known a lot of folks who, made a great living, didn't have a lot of stress, or at least they didn't, present that they had a lot of stress, but, and they didn't use a budget. It was all, they knew that if they were selling and they were charging more than what it cost, then they were going to make some money.
Okay.
But I think that we would all agree that having a plan before you start something serious and significant like a business, having a plan is a really good idea. And a plan, number one, it makes you think, which is the most important thing. You think about, what is my strategy and how am I going to leverage that to produce, some revenue and some profits.
Right.
The other thing about a budget is that it does get everything that's in your head onto paper. And that kind of thing works for me. And I think it works for a lot of people to kind of translate my idea for a business plan into amounts, dollar amounts, so numbers and time. And so I suggest, when you're planning, that you look at a time period of at least 1 year. The annual operating budget is kind of the most popular, form of budget that people do. And so, just the part of thinking about it and translating it into a plan on paper, and then having something that, let's say that you have a team working with you, you need to have some form of plan that you can share with your team. Something up here is very frustrating when you're working with somebody who, is telling you what they're thinking, but you don't have, the transparency is just through communication. There's no plan on paper. And so I like to say that that a plan is great, because if you and I are talking about the plan, and it might be an accountability discussion like, hey, we're not on plan, we need to make a change. You need to have something. It's an inanimate object, a plan, a budget. And that might be in an Excel workbook. It might be loaded up into your QuickBooks, but your plan is something that ultimately, if you do have a, accountability conversation with somebody about your plan, you want it to be something that you can hold and say, look, this is the plan, and we agreed on this, and here's where we're falling short. What are we going to do about that? And so you can kind of see that it's a great advantage to have a tangible, object, a plan, rather than just having it as an idea in your head.
So a budget is a plan for you, your staff, but also the business.
Absolutely. And so, a plan, this is a plan that does not get changed. It's fixed for the year. And you might even, a week into the year or 2 weeks into the year, you might already be off plan. Okay. It's going to be wrong. That plan is going to be wrong, but it is your idea of how you're going to use the constrained resources, the resources that you have. It's the idea of how you're going to use your resources to produce profits, and to employ people, and to, pay your taxes, that type of thing. So it's really kind of an allocation of your resources, your time and your money, and how you're going to leverage that stuff to produce profits. And, I think that a great reason to produce profits is, sure, make a good living for yourself, but also to employ other people. I think that's a great thing that that business owners do for the community, the business community, and the community at large. So a plan you want to think about as something that, even though it's going to be wrong, it's, right out of the gate in some cases, it's fixed for a period of time, and that's the plan you're going to follow. And as you go along, you monitor how you're doing towards that plan, and that's when you make your changes.
Craig, as you were speaking, I was thinking about an old saying that said, if you don't plan, you plan to fail. And I feel like that's the same thing with, as we're talking about having a budget for your small business. If you're not able to see like the fixed part of it, then that could lead to failure within the business. That could lead to you going into the negative in your account.
Absolutely. And I sometimes think about, I did a landscaping project where I made a plan. It was a landscaping project in my backyard, which was a mess when I moved into my house, and I laid out a new lawn, new sod, but there was a lot of work that had to happen, and I didn't have the tools to do that. And so I had a plan that on the upcoming Saturday, I was going to wake up at 6:30 a.m. I was going to be at Home Depot at 7 o'clock to rent the equipment that I needed. And then I was going to work for a couple of hours at home before a friend came over to help me. And then there was going to be a delivery at noon of the sod on pallets, and I was going to roll that out. And I thought, if I didn't have a plan for that Saturday, what were the chances of me getting this job done, especially with a friend coming over to help me?
Exactly.
And so I had to be, tick, 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 have the plan laid out. And I know that people do this kind of thing, especially, think about people who go to Disneyland and they plan out, okay, we're going to hit all of these rides and we're going to hit all of this stuff. And we have limited time. So we have to do this, and this is where we enter. And, it's fun. People love to do that. But then, planning for their business, sometimes they say, well, I just don't have the know-how, to put together a plan. How would I do that? I'm not a finance whiz. So, it's going to take too much time. So I encourage people, I've got some tools that I'd be happy to share with your listeners for building a budget and some of the other things that we'll probably end up talking about today.
Why is it so important to have a separate personal account from your business account?
Oh, yeah. Yeah. So I started talking earlier, Crystal, about, having a different account just for your business expenses, right? So, and, there are a couple of really good reasons to have a separate business account. It's, one is related to, paying taxes. You want to have your business expenses very clean for paying taxes. Okay. Once you file your taxes, you don't want to have your business financial records start to divert from what you filed at the last, tax filing. So you want it to be separate. And I would say that a great thing to do is to open a bank account. There's many local banks that have very low or no charges for business banking. And so I would suggest getting one of those. And so doing keeping your expenses separate and using this separate bank account is essentially what you'll need as well for things like in the future, like applying for an SBA loan. Your finances need to be straight, and your lender needs to be very confident in your bottom line profits of that business and that they're clean. The other thing is that ultimately, when you go to sell your business, you want the prospective buyer, to be really confident about your books. And if you've got little things that are personal, interspersed personal expenses interspersed in the business financials, the confidence that a buyer would have takes a little hit every time they see something that is your personal stuff running through the business. Okay. And so some of the good best practices for a small business owner and having a different account is pay yourself a salary out of the business rather than making little small draws,
Yes.
when you do things, and when you, for parking and for computer equipment and things like that. So you don't want to be taking small draws out of your own bank account and saying it's business expense. Just have a business account to pay for all those little things and to pay yourself. And ultimately, it'll be super rewarding, because when the people that need to have confidence take a look at it, like I said, a lender or a prospective buyer, then you want it to be clean. You want it to tell the right story about your business. And it's not going to be like that if you've got a bunch of personal expenses like dog grooming or something passing through your business.
Yes.
I've seen it all.
The stories you must have, Craig.
They were not dog groomers. If they're dog groomers, that's one thing. But
yeah.
Yeah.
Oh, right. Craig, you mentioned about paying yourself. If someone is a small business owner, how often should they pay themselves, and how do you determine how much to pay yourself?
Gosh, that's a really good question, and a lot of small business owners struggle with that. A lot of small business owners don't ever pay themselves, which is because in a lot of cases they're having cash flow problems, and it's a challenge. But one of the important things is that if you are running your business and you're the primary day-to-day, person in the business, there should be a fair market, expense in your business records for yourself.
Mm-hmm.
Okay, kind of fair market value. In other words, if it's a job that would normally pay $80,000 a year, you don't want to pay yourself $5,000 a year and say that the business is $75,000 more profitable than it really is. A lender or a buyer will look at those records and ask the question, how are you running the business without without any type of human resources expense, any labor expense. And so you want to pay yourself a salary that if you are having cash flow issues, and in the case of, in that example that I mentioned of $80,000, if you can only afford $40,000, you do the best that you can afford. You don't want to put the business into a position where it can't pay its bills.
Mm-hmm.
There's a philosophy in business called, profits first, like pay yourself first. And I like the idea. It forces a business owner to take some money out of the business to save it for themselves, to save some for future taxes, and then to save some for a rainy day. Okay. And if your business isn't producing that, then it's a good goal to start producing that. And, how much do I pay myself? Well, if I can't manage enough cash flow, enough free cash flow that the business is producing to pay myself kind of a fair market rate, I want to start off by at least paying myself something on a regular basis, so that I'm not pulling little bits from the business to pay for my groceries. And I have some stable plan to pay myself and to operate the business. And if I'm not able to pay myself and also run the, operate the business, that's where I want to consider, my pricing and my business model. Is that actually working? And I might want to consider looking for some funding, looking for a small business loan or something like that.
How often should someone look at or review their financial statements? Is this something that should be done quarterly, monthly? And I feel like the financial statement is right along in there with your budget as well, correct?
Yes. Yeah, absolutely, Crystal. And I'd say that for a small business owner, the most important financial statement is a monthly profit and loss statement. Okay, so it's in QuickBooks, it's referred to as the income statement. And I would say look at that at least, at the least, look at an income statement monthly.
Okay.
Okay, this is an income statement you wouldn't look at in the middle of the month, because at the end of the month, you want to reconcile your accounting system so that your end of month income statement reflects all of your bank transactions from the past month. Okay, you don't want to cut it off in the middle because things are missing when you do that. So at the end of the month, you want to look at your income statement at the least. And when you're doing that, it's easy to get into a routine where you just, you look at it like you look at your favorite restaurant's menu. It's just, there's not a lot of scrutiny there. If you're just giving it a once over. But what I suggest is that you really look at it over the past 12 months and you look at how things have changed. Is your revenue increasing as a result of you doing something more strategic, or active in your business? Are your expenses, especially like labor expenses, as a percent of your revenue, are those increasing? Because if they're increasing, something needs to change for you to remain profitable.
Mm-hmm.
And so you want to look at kind of the things that are changing over time, like over month to month. The other thing, so that's one thing. That's the main thing that I suggest that everybody looks at. The second thing is that in between those months of looking at the income statement, it's a great idea to look at metrics in the business, because and look at them weekly. These are key metrics that are a precursor to what you're going to see on the income statement. And, in the middle of the month, you want to make sure that you're on track with a lot of the activities and sales and cash movement in the business, so that at the end of the month, you're not surprised. So those are, I would even pick a few things to look at every day. What were sales yesterday?
Mm-hmm.
How many hours, how many labor hours did we expend yesterday? Those types of things, there should be a couple of things that really drive the bottom line of the business that you're looking at every day.
I would also say, and please jump in here, Craig, you're the expert here, that when you are looking at your financial statements, when you are looking at those key metrics, you can also see what part of the business, what products or services are doing well, and what products or services are not doing well. And then that allows you to make an educated decision on how you progress in your business, correct?
I love it. Yes, yes, that's exactly, most businesses do more than just one thing. They do
Correct.
variations of things. They offer different products, different service lines, and each one of those products and services kind of has its own business model.
Mm-hmm.
You've got a margin that you make on the sale of that, and you've got some of your overhead and fixed expenses that support that piece of the business. And so, one of the things that I do with business owners is I help them to segment the business and find out where are we making money and where are we losing money, and how can we do more of the things that are making us money, and how can
Correct.
we stop doing things that are making money leak out. And so that's really, when we haven't talked about it a lot, but in the fractional CFO realm, or really just in the CFO job description, that's really what it boils down to, is where are we making money and how are we going to, tap that lever more, and where are we losing money and how are we going to stop that. And so those are some of the higher functions of the CFO function for a small business.
How can small businesses, Craig, cut cost without cutting quality? Or is that possible?
Sure, it is possible, and it's getting even more prevalent every day now with the kind of this surge of gig economy solutions. There's all types of productivity tools,
Mm-hmm.
and there's all kinds of, let's call it freelance or fractional, work employment solutions that can help a business to cover a bunch of the tasks that, it used to hire full-time people on W-2, employment. We used to hire people full-time to do those things. And now there's just so many different options to leverage AI, of course, and to leverage fractional providers like myself.
So, Craig, how does a small business know when to DIY it, do it themselves, or hire outside? I know at the beginning of our conversation, you stated that you went with Fiverr to do your logo. When do I know I'll just do my own logo, or let me consult Fiverr? I'll do my own consulting, or let me hire Craig with 3D consulting to help me. So when do I know when to do which?
Great question. So the biggest thing is who can add the most value to the solution that I'm trying to get. And for example, with the logo, I can't do those things. If I could do some, graphic arts, those type of things, I probably would have just put it together myself. And so if the value is outside the business, if there's a short-term project that needs to be done, that's a good candidate for outsourcing and getting help from an expert who does that. And for a lot of administrative tasks of running a business, like bookkeeping and IT support and HR support, those types of things, I'm not an expert at doing that in my own business, but I need help in those areas. And so I go out and I look for people who specialize in that and offer a small package that, if I put all those things together, all those little expenses together and all those little projects together, it might end up costing me what, similar to what I would spend on a full-time office manager in my business, let's say. And so the great thing is that I can break that up and use my constrained resources, cash, to go and find the value out there where I can't do it myself. And I would say that early in your business, in building your business, you're going to be doing a lot of things yourself. You're going to be filing paperwork. You're going to be making sales calls. You're going to be handling any HR issues, and you're going to be working nights and weekends in a lot of cases. You're going to be working overtime. And so that's just something that I think a lot of people know already. If I'm going to start a business, I'm going to build it kind of with sweat equity. It's going to be me doing a lot of the things, and I'm going to learn how to do a lot of the things. And so, but in order to build the business, I need to be able to be very strategic and, recognize that I have a constraint, which is cash. And if I didn't, I could just go, hire the most expensive experts on everything. And that logo that I said cost me $50, I could probably pay a professional $2,000 to make the same thing. And so that's where your intuition and your business chops need to be in sync.
Let's talk about cash flow. Give us your definition of what is cash flow. And also, do you find, in your expert opinion, that that's something that small business owners have difficulty with?
Yes. Yeah. That cash flow is, is really, it's the lifeblood of the business. And, without the cash, you, at some point your business will grind down to a halt. And you might even have a very profitable business model where you sell something at a high price and it doesn't cost you a lot to produce it. But if it takes too long from when you spend money to produce it to when you collect the money at the end, then in between there, you could be in trouble at some point. Okay. Especially if you have more and more customers that want to buy from you and you're growing. It's like, well, okay, I need more cash. And that's when you want to kind of look outside for some outside funding. But cash flow, one of the important things about it is that it's when you're planning to spend money and to receive money, you want to make sure that you're looking at the day that it comes into your bank, that cash comes into your bank, and that cash leaves your bank. This is something that is, it doesn't sound very complex or difficult, but a lot of small business owners have difficulty with managing this and with forecasting this. And so it's another thing that they tend to keep the idea in their head. Okay, I've got payroll coming up. That money needs to be in the bank, Thursday at noon. And by that time, how much money do I have hitting my bank? And it's great to be in a position where you don't have to worry about payroll like I'm describing. And that's what I use tools and methods to help business owners not be in that position where they're always stressing out about payroll. But it's a good example of, you need cash to move. You need it to move into your account before that payroll moves it out of your account. And so you always have to be looking forward and be aware of how much funding you need. And if you're not paying attention and managing your cash flow, then ultimately it's going to impact other people, like with that payroll example. And that's the last thing you want, the most.
That's what I was thinking too.
Yeah.
That
Yeah.
would be horrible if you could not pay your staff. And I feel like you would lose so much trust and credibility because your staff, they've done the work for the week or the 2 weeks. And now when it's your turn, you can't.
Yeah. That is the most crucial part of your business and your responsibility as a business owner. And I learned that lesson early on in corporate America. And I had talked earlier in our conversation, Crystal, about how great it is as a business owner to employ other people.
Mm-hmm.
And sure, that's great. But if you have a hiccup in paying them,
Yes.
you're negating that. And so you don't want to impact other people's livelihoods. And this is what probably keeps business owners up at night the most is payroll, just a constant. And, a lot of folks that I talk to, they're a lot of small business owners, their biggest stress in life is that payroll. And so there's a few ways to kind of smooth that out and reduce the stress level, but it requires, like we were talking about before, it requires planning and forecasting. And so it's, the best tools to do that are not in your head. They are primarily, on a piece of paper or on an Excel spreadsheet.
Craig, you've used the word forecasting a couple times during our conversation. Explain to my community what is forecasting and how can someone forecast if they've never done it before? Maybe this is their first time even hearing that word as they're listening to you on this podcast.
Sure. So I mentioned before that a budget is fixed and it's going to be wrong. At some point in the cycle that you budgeted, that you planned for.
Okay.
And so that's where a forecast comes into the picture. Because just imagine I build a budget for, it's December and I'm building a budget for next year. So I plan out my revenues, my expenses, and my profit. And then by January, I've already missed January's revenue by, $5,000.
Mm-hmm.
And this is where a forecast comes into play. So I know that I'm already kind of out of bounds by that $5,000. Now, is that going to continue? Is that $5,000, is it going to happen next month as well? Is it just a timing thing and I'm going to make that up next month? Or is it going to repeat and my income, let's say my income line is going to diverge even further from my plan.
Mm-hmm.
And so that's, I'm going to forecast, okay, I'm going to get back on track next month because that customer just had, they had their own cash flow issue, but they promised that they're going to pay me $10,000 next month. Okay. So my forecast in that case would say, okay, I'm going to get back on budget, but let's say that I lost a client or I lost an employee who was producing that, that revenue in the business. Now I've got my plan,
Mm-hmm.
which is wrong, and I've got a forecast, which is real life. And that's, that is a translation of my, what I think is going to happen next month. And so that forecast helps me to make new decisions now. So if the forecast says that I will be 5,000 under my income plan every month going forward for the next 6 months, how am I going to, what am I going to change in my business, in my expenses? or the activity that I take. Maybe I need to jump in and start, running like crazy and make up that $5,000 for next month. And so how am I going to change? What actions am I going to take? That's the great thing about a forecast. It's going to help me to decide what I need to do next. Okay. So it's definitely real life. And you should, I always keep a forecast for clients that, one is kind of a worst case forecast and one is the best case. I gave an example of not making enough, having 5,000 less income in my plan, but it could be the other way too. Well, I got some customers that I didn't expect. This is great.
This is great.
Plan is wrong because it was too low.
Yes.
But what do I do now? Okay. Do I need to invest in some new capacity? Do I need more space, more machinery? Do I need more people? How are we going to, manage as a business with the divergence from our plan that's happening? So that's really where a forecast comes into play.
Earlier in the conversation, Craig, you were talking about the importance of having a business account separate from your personal account. One of the main reasons was you could save to pay your taxes out of your business account. How does someone know how much to save for your taxes?
That's a great question. I would say that there's generally like 2 or 3 ways. One is, of course, to talk to an expert.
Okay,
a tax specialist.
Okay.
Yeah. So somebody there's tons of people out there who will do your taxes. Mm-hmm. And some of them are CPAs and some of them aren't, but that's their livelihood. They do taxes for small businesses and they've seen it all. And they can give you a pretty good sense looking at your trend of revenue and expense, from last year, or if you're in your first year, from this year, you look at your plan and see how much profit my business is likely to produce if we meet our plan. And then it might be that there's no expectation of taxes because you're going to have a loss in your first year. That happens. Mm-hmm. Or if you're going to, after paying yourself, if you're going to make $50,000 of profit in the business, then there's going to be a percentage of that goes to the IRS, right? And so an expert can tell you that and say, well, it's probably going to be around, and this is something I use in my business, about 28%. In smaller businesses earlier on, it's going to be smaller, maybe 15 to 20% of your profit would be owed for taxes. And so you can make some estimated tax payments throughout the year to kind of stay on track for paying your taxes. You can, if you think that you're going to have to pay $10,000 of taxes at the end of the year, then a good thing to do is you can pay for that. You can pay $2,500 on a quarterly basis as an estimate to the IRS. So that's what I suggest a lot of my clients do, is that they make estimated tax payments either on a monthly basis or on a quarterly basis in the year that we're doing business. So right now, if I could make a quarterly payment for 2025 estimated taxes. Mm-hmm. Okay. And so that's a great reason to have a separate account to save estimated tax payments in. Okay. And I would say that you could even have a couple of you could really have, some people suggest having 3 business bank accounts. one for taxes, one to move money into for a emergency fund, and then one for the day-to-day operations of the business.
Oh, wow. Okay, so as we're talking about money, we're talking about taxes. I want to make sure and give a disclaimer here, Craig, that please, as you're listening to this, consult your own, professional when it comes to your taxes. Consult your own professional when it comes to setting up a business account or a savings account, whatever that looks like for you. Craig is a professional, obviously, but he's giving general information in general education as it pertains to revenue, cash flow, and things like that when it comes to your small business. So that's my disclaimer.
Good.
Do your own research, consult your own professional, consult your own professional here. Okay, so Craig, how does a business owner know when to reinvest in their small business? So, they're forecasting, they're looking at their financial statements, they're paying themselves, they're saving for taxes. When do I know, okay, I can reinvest in my business now?
It's a super question. And people who are starting out, I think it's a natural that they reinvest into the business. That's why I was commenting that you should pay yourself on a regular basis. And in that example, I said that, people a lot of times won't have free cash flow to pay themselves. But in the case that you do, a lot of times people early on are just automatically reinvesting in the business. They leave everything that they leave all the profits in the business as kind of a savings account. But one of the things that you should be looking for as a small business owner and operator is opportunities to invest in the growth of your own business. And you can kind of tell when you've tapped into a group of prospects, let's say, where there's a lot of demand for your services, and you are connecting with with your ideal clients who are buying. Let's say that, in a great, scenario, you can't keep up with, you're doing so much work.
That is a great scenario.
Yeah. Let's say that you can't keep up with the demand, and that if you invested more money in, let's say, inventory, that inventory would sell really quickly. Or if you invested money in more marketing, you're already seeing, some leverage from your marketing. If you invest more money into the marketing, if you're confident that you would be able to connect with even more prospects with the pain that you're solving in your business, that you would be driving a return on investment that you're putting into the business. So in those cases, I help people find money. The best way is, hey, if you're organically, producing profits from sales in your business, if, in some cases that's enough to fuel greater and greater capacity, greater and greater labor force, and, greater connection with your prospects. But if you are scaling very quickly and the money that you're making is not enough to buy new machinery or to buy a new marketing program, let's say, or to buy more and more inventory, then that's when you want to start looking for a loan. Is a good place to start, like an SBA, Small Business Administration loan, or just a commercial banker, or a line of credit. These are great tools to leverage to reinvest in your business when you are seeing that success. Okay. Lenders, small business lenders and commercial lenders, their biggest thing is not to find business owners who need money because they keep running out. That might be because you have a poor business plan. But what they're looking for is people who can repay the loan. And so if you are firing on all cylinders and you need more fuel, they are more than happy to provide you with funding so that you can reinvest in the business and really drive that return on investments that's going to make your lifestyle is going to take a step up, your capacity, you can employ more people, those types of reinvestments where you know you're earning a return on it. That's the sweet spot of running a small business.
Okay, so Craig, I have two more questions for you, at least I think.
Sure.
Before I let you go.
Sure.
What is the money mind shift an entrepreneur or small business owner needs to have in order for their business to be successful?
Super question. It's interesting that the mindset that goes along with money, because two people can have the same amount of money in their bank account and have completely different feelings about it. One will be really gung-ho. I'm going to spend all that money on marketing and new equipment and I'm going to drive this business forward and I'm super excited. Where the other one might feel like, gosh, this is not enough money to sustain my business if something horrible happens. And so I'm going to cut off the free coffee in the break room. Okay. That kind of thing. People have different mindsets about money. Mm-hmm. As an entrepreneur and a small business owner operator, I'll go back to what, we were talking about in reinvesting in the business. You want to look at your expenses as an investment, and everything that you spend money on, you want to be thinking about, how can I produce a return from this investment? And if it's not producing a return, if it's not really driving my business forward or producing any profits, I have to think about, why am I going to that expense? And so this is something that kind of brings it all together, all of that, the budgeting and the looking at your results every month or every week, and looking at your plan and your demand and seeing if you need more money to fuel it. This is kind of where it all comes together, that mindset of, hey, everything that I'm spending in this business needs to be an investment that's producing some profit or something valuable. So that's the mindset that folks need to be in when they start a business. How am I going to leverage my resources to produce more?
Right. And I feel like I'm gonna get to my final question with you, Craig, but I feel like sometimes that could be scary, because the mindset is, I need to save in case something happens over here, mm-hmm. and I'll have the money. But saving is great, but if that's all you're doing is saving, then how can you grow the business? How can you hire if that's kind of a goal further down the line?
Right.
Yeah.
Absolutely.
So my final question for you, Craig, you clearly have the education, the experience, the history when it comes to money matters, especially with small business owners. What is your intention in this space?
So it's, the biggest thing that I want to help small businesses to do is to transition from like winging it, which is kind of the overall kind of state of small business. I'd say that people are winging it for the most part, and that's not a horrible thing. It's, as I mentioned before, we do that with a lot of things in our life. And some people are very, very good at, formulating a plan in their head and kind of tracking it without putting it down on paper and making a plan. Okay. But what I'm here to do is to take those, let's say, those best practices from Verizon Wireless, from the corporate world that I learned. Why do you think a large public company uses financial best practices like budgeting and monthly reviews and budget variance analysis and forecasts and different accounts for different investments? They use that because it's a tried and true way to succeed in business. It's very objective. It's, accountability based, and it's all planned out and transparent. And so those best practices, some of those, even though, corporate America is very different from small business America, we're talking about business, and it's both are a business. And so, one is, the reputation of corporate America is that it's very, budget driven and, Wall Street forecasts and all these things. Well, you can actually do those things in a small business and leverage planning and analysis to drive that business just like a Fortune 500 business does. And so I'm kind of bringing those best practices to small businesses to help them succeed. And like I said, employ other people. You could probably tell I'm a really big proponent of employing folks. Mm-hmm. And so to enable you to do that and do that in a rewarding way for all parties, making sure you make payroll all the time. So you're forecasting your cash flow, being transparent about the plan so that the people who are responsible for driving parts of that plan know what the plan is. It's not just the boss in the boss's head.
Right.
It's been that accountability and that guidance has been pushed down to me from the main plan. And so you can see how all those best practices apply to small businesses as well. And, the corporate experience for me was, I said that Verizon put me through college, put me through, a master's program. They also trained me in-house. It was like a university. I learned so much about managing people and dealing with customers and administering a business. I learned so much about that. A lot of people who are running small businesses never had the advantage of that training like I had. And so I'm kind of, transferring that knowledge to a lot of folks who are, trying to run a successful business.
Thank you so much, Craig, for everything, all the information that you have freely given us, the information you learned from Verizon. So we thank you for that as well, for sharing that. And like I said at the beginning of the podcast, many people don't want to be told what to do with their money, but many people need to be told what to do with their money if they want to be successful, if they want to hire and bring on staff. It's a necessity.
Mm-hmm. Absolutely.
So thank you so much for coming on and talking to us about Money Matters on this podcast.
Thank you.
To my community, thank you so much for tuning in, listening, and learning. You can get Craig's podcast along with all of my other podcasts on YouTube Podcasts and Apple Podcasts. And remember, you always have time to listen and learn on the go.